Hello and welcome to the Dukascopy TV studio in Geneva. I'm Sam Meredith, and here today to discuss the US dollar and the ruble trading pair is Bernhard Schicht, information technologist with Dash. Welcome, Bernhard.
Hello, Sam. Thank you.
Okay, so first of all, what makes the US dollar ruble especially attractive?
As we spoke in a previous interview, this is an exotic currency pair, and we trade many pips on a day. It's not like Euro US dollar. You might trade maybe 100 pips or 200 pips. On US dollar ruble, you might trade 600 up to 10,000 pips one single day. That's a lot. And so you have to be very careful on this currency pair, not to lose money, but to win money. And if you take your risk-reward ratio and also your risk ratio to your account, you should not invest a lot of money into this currency pair. It could go completely in the wrong direction. So this is very special on this currency pair, but if you're on the right side, it can just push you like a rocket into the right direction. So this specialty is for traders. They can last these gaps over the weekend or over the night as well, because this currency pair is just traded from 7 o'clock GMT or UTC to 2050 UTC or GMT. And the interesting part of it is it's like on a stock exchange. In the beginning, you have it's not an open auction or something like this, but on many brokers you will see a lot of movement at 7 o'clock in the morning. The people look at the oil price, because US dollar ruble relies a lot on the oil price and the gas price as well. And so they see where's the oil price this morning, where did it go, and then they try to trade US dollar ruble. The same as the Russian companies, the oil and gas companies, and many traders. So there's another thing that is important on this pair at the moment. Russia has limited access to the financial markets. So trading this currency pair is still legal and allowed, and it's no problem to get it, but the liquidity is way higher now, because everybody focuses on this currency pair, as many other commodities are not able to trade. So it's a very interesting pair.
Okay, so why is it perceived as an advantage going short on this instrument?
Short on the instrument means you bet on a better ruble, a rising ruble, stronger ruble, because US dollar ruble is based on the US dollar but traded on the ruble. So if you go short on that, the price goes down on the currency pair, but the ruble gets stronger. In this case, you think after like a strong climb or climax on this pair, you think, okay, now it's the time to go short. And the advantage is if you hold this pair. We spoke about in the last interview. We spoke about holding the position, not on hours, not on a day, maybe more than a day, 2 days, 3 days, on small trading sizes, trading volumes. And if you go over the night, it's also called overnight or swaps, you get interest rate back on your amounted trading volume. That's very interesting. The bank gives you an interest rate. So you might win twice. You have a win on your short position, and you have an overnight gain, and that's very nice.
Okay, well, we've spoken a lot about the advantages. What about the limitations for the dollar ruble? Can you tell us more about those?
Oh yeah, we spoke about risk already. If it goes against you, it's easy to lose 3,000 pips at the moment. We have to speak about the political movements at the moment, because the spread, that's the difference between bid and ask price, and also the price you really get could be bad. It's called slippage, the price you really get. And if you put your stop loss too close to your entry, on the entry price what you got, it just jumps up and down, and then you're in the stop loss and you have a little loss. Could be 1,000, 2,000 pips easily. So what you have to do, you trade small amounts and you place the stop loss a bit further, and you try to gain what you expected, the direction, what you have thought about it, and then you gain like 6,000, 10,000, 20, 30,000 pips. And yeah, then you just bank this money and you go into the next trade. What we do in our company, we try to combine different exotic currencies. So if we would rely just on the US dollar ruble, it could happen what I said. You just lose on a day or the second day, and there's no gain on the other side. So you need some hedge. So we go on other currency pairs, especially exotic currency pairs, because like the US dollar ruble, there are not so many people trading randomly. In other currency pairs, you have people that trade up, down, the sea, and want to like scalp a little bit. It's not so easily possible to trade like this on the US dollar ruble. So what we do, we combine different currency pairs, especially with the US dollar ruble, and so we make a mixture of different currency pairs to make your income, your equity growth way stable, more stable than with only just one currency pair. And that is very useful.
Okay, Bernhard, thank you very much.
Thank you, Sam.
And thank you for watching. Keep clicking back to Dukascopy TV for more updates and exclusive interviews. See you next time.